Welcome to today's tutorial where we're going to take a look at bearish divergence. We're going to try and find a couple of examples and have a run through exactly what it is. Now, bearish and bullish divergence are considered some of the most powerful signals in the market. Now, we've already got a video on bullish divergence, so we wanted to close it off and give a couple of examples of bearish divergence as well. So in front of me here on MT4, I have the New Zealand dollar and it's on the hourly chart, and I can see a couple of examples of bearish divergence here. So with bearish divergence, what we're looking for essentially is a shorting opportunity or the option to exit a long position. Okay, so first thing what we're going to have a look at is we need the price action to be having a higher high, ideally, and then an oscillator such as a stochastic or perhaps an RSI, it's actually making lower highs. So the first example is just through here, where you can see the price action on the chart is hitting a higher high. But when we have a look at the stochastic just through here, you'll notice that it's actually hitting a lower high. That's divergence, and in this case that's bearish divergence. So our signal here would be to short the market, and I have a 100-period moving average on the chart as well, so it's indicating that that's also going down, and we would look to short the market just at that point there. So we could put a limit to sell above the market as it rallies up through that point, and we estimate that the divergence could happen at that point, or you could wait for confirmation and short it as you see a break of perhaps the recent lows and confirm the direction before you jump on. Because the other thing you'll note with stochastic is when it's actually in overbought territory, it can actually stay that way for quite some time, especially in a strong trending market. You won't find it down here and oversold at all. It'll continue in the overbought region. So as you can see, we've got a signal here, an opportunity came up and we would be able to short that, and it resulted in a reasonably nice trade there. Now, if we pop over here, we see another opportunity where the highs at this point were getting higher, depending on where you want to just mark it. But as you can see, the highs are getting higher there. And likewise, if we have a look down below here, the highs are getting lower on the stochastic. Once again, that's a bearish divergence signal. So depending on how you have your entry point, whether you wait for it to confirm the recent lows, and then also how you exit your trades. Do you have a trailing stop? Do you hit a price target at recent support, and so on? A couple of things to consider when you're looking at your bearish divergence and trading that to completion. Now, I wanted to show you another example. So that's two examples on the New Zealand dollar hourly chart. So let's now have a look at the gold versus US dollar here. So we've got another couple of options just through here. One is a little bit of a subtle one, because this market moved up so high so quickly through there, but in actual fact the stochastic did actually hit a lower high. So we're looking at just in this region here, and then likewise the indicator was hitting a lower high just like so. So higher highs, that's the signal up there, that's the bearish divergence signal. And again, well, the moving average is moving down, so in theory that is trading in the direction of the trend if we would short it at that point there, and then it fell away quite nicely. Now let's have a look at this other one just through here. There's another one, as you can see here. So the market was making consecutive higher highs, and at the same time, the stochastic was making successive lower highs, and in particular this last one here. So potentially you could have actually taken a short signal there. And once again, it depends on where you got in, where your exits are, and potentially on that trade you may have got out of break even, you may have moved your stop to break even, you may have even taken a small loss on that. As you can see, it bounced back pretty quickly there. But then there was a further bearish divergence signal as the market did in fact make a new higher high on the highs, and the indicator, the stochastic, was actually making lower highs through there. And as you can see, it fell away quite significantly. But once again, depending on how tight your stops are and how you exit the trade, then you'll be able to trade that according to your style. So there's a couple of examples of bearish divergence. Just wanted to break the videos up because we have a bullish divergence one, wanted to make sure we've got a bearish divergence one, giving a couple of signals. They are well worth doing. It's very hard to program into MT4 or any charting software typically. However, as a visual cue, they are very good to watch, especially if you're long on a trade and you start to see some bearish divergence. It could be an early warning signal to maybe tighten your stop if you're running a trailing stop, or perhaps even put a limit to sell above the market and hope that it hits that point and you exit taking an excellent profit there. depends on your exit strategy, your time frame, and what your goals are, risk reward and so on your particular trades. So hopefully you found that tutorial helpful on bearish divergence. If you did, please give it the thumbs up, and we look forward to you subscribing to the channel. Thank you.